Hey everybody, welcome back to the channel. Today we have an interesting video. The SEC, the Security and Exchange Commissions in America. For those who are international, it's basically the governing body that makes sure everything is okay with stock prices and regulations and all that stuff. They just came out with a video. And they put out a video on their YouTube channel. I did not know the SEC had a YouTube channel. This was phenomenally surprising today. I was like, wait a second, the SEC has a YouTube channel? Yes, they do. They have a YouTube channel indeed. So let's pull it up right now. Boom, here it is. Investomania. The SEC put out a video about meme stocks. As you can see, from the U.S. Security and Exchange Commission. They have 8,000 subscribers. We're going to watch it. Here we go. Are you ready? Boom.
Welcome back, Brad. It's your investment.
I'll take meme stocks. Invest.
Ouch. Your investment.
So he picks meme stocks on this theoretical game show called Investomania. And he obviously picks the wrong thing, so he gets pied in the face. Interesting. We're going to analyze this.
Julie?
I'm gonna do some research first.
Well played, Julie. Well played.
We can do research. Investing is not a game. Always do your research before making an investment decision. Learn more at investor.gov. Before you invest, investor.gov.
Okay, now there's a couple more we gotta watch. This is their description. Sometimes investing may look and feel like a game. The SEC's Investomania public service campaign uses a game show concept to educate investors in a playful way that investing is not a game and that they should do their due diligence when making investment decisions. Bottom line, don't play games with your financial future. You can learn how to avoid getting caught up in a game like investing and test your knowledge in our investment quiz at this website. Let's go to this website. I haven't seen this website. Oh, wow. Here we go. Take the Investomania investment quiz. Should we take this right now? How many questions are there? Question 1. Let's take this right now. All right, there's 10 questions. I wasn't even going to do this, but let's take this. Would you be willing to answer a few questions about your experience? I didn't even take the question yet, my guy. Come on. All right, let me load it again. Question 1. Brad is interested in investing in a meme stock. What should Brad do? Invest immediately, do research before, blah, blah, blah. Okay, obviously it's that one. Question 2. Brad is opening a brokerage account and learns that the default account type for Brad's new account is a margin account, but Brad doesn't know what a margin account is. What should Brad do? Start investing in the margin account immediately. Open a cash account instead, blah, blah, blah. Okay, that one. Oh, we got 4 choices here. Brad hears about a risk-free investment opportunity guaranteed. First of all, why did they pick Brad? To pay a return of 25% annually for 5 years. What should Brad do? Invest immediately. Research if celebrities have endorsed the product. Only invest if Brad friends Julie thinks it is easy money. Ignore the opportunity. Obviously, you should ignore it, right? You probably shouldn't do it right now. Score 3. So I got 3 right. You should probably ignore that if someone's promising you 25% with no risks. Which of the following investment behaviors may hurt Julie's investment performance? Holding losers too long and selling winners too soon. Focusing on past performance, ignore fees. Buying what you know. All of these 3. May hurt Julie's investment. Holding losers too long and selling winners too soon. Yeah. Oh, that was wrong. Okay, we'll see how that's wrong. You should buy crypto, says Julie's favorite actor. Trust me, I'm an actor. Julie should do research first. When it comes to investing, FOMO is the fear that you will miss an opportunity to become very wealthy. True. Fraudsters continue to exploit the popularity of to learn retailers often lead to devastating losses. Crypto. The strategy of setting up regular automatic deductions from your paycheck to your bank account into savings and investment account is known as why? First of all, it's not timing the market. It's not paying yourself first. Well, it might be putting your eggs in one basket. No, researching before you. I think it's paying yourself first. Yeah, that's right. Day trading is a long-term investment strategy. False. An index fund is a type of mutual fund or ETF that tracks the returns of a market index. True. Final score is 9. Okay, so the one I got wrong was this one. A Library of Congress identifies 9 investment behaviors that can show past performance. These behaviors include active trading, focusing on past performance, ignoring fees, familiar, various mania and panic, momentum invention, blah, 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 blah. Okay. It was an interesting quiz. Nothing that crazy. I guess I'm a 9 out of 10 investor. But this was an interesting thing to talk about in general, and I wanted to take that quiz to kind of see how they're thinking about this. Let's look at another one. Investomania, easy money.
I'll take guaranteed returns for 10,000.
Can't beat that.
Easy money.
Investing is not a game. All investments have risk. Get free.
Okay, let's see the other one. Let's see margin.
I'll buy stocks on margin. I don't even know what that is.
Sure sounds fancy.
Invest.
Investing is not a game. Borrowing money to invest can be very risky. Learn more at investor.gov. Before you invest, investor.gov.
All right, and then let's see crypto.
I'll take celebrity endorsement.
You should buy crypto. Trust me, I'm an actor.
I'm in.
Investing is not a game, so be careful where you get your advice. Do your own.
Now, obviously, they were going after Matt Damon, who's in the Crypto.com commercial off the Trust Me, I'm an Actor type of thing. So let's talk about this, right? I think this is incredibly interesting. I took that investor quiz. I wasn't even going to do it. I didn't realize they have one. And then I took it because I wanted to sort of see how they were thinking about it. I think there's two perspectives to this. Number one of the takes I saw, and this is the more screw the SEC, they're kind of mean take, was this tweet right here. This is the comment. It seems to trivialize millions of retail investors, seemingly diminishes one of the most important market movements of 2021, and appears to poke fun at millions of average people joining the market. And I would tend to agree with that, right? So the first take that I think we need to talk about is the fact that the SEC basically has said the millions of people that entered in the market in 2021, retail traders, people who started because of Robinhood, someone like myself, the AMC, GameStop folks, obviously they're taking a play at all these people, don't understand the market, don't understand what they're doing, don't understand investing, don't understand fundamentals, and they've made decisions that are so that are based off such horrible paradigms that they deserve to be down the amount of money that there are, and that it allows the SEC to kind of gloat in their face that investing is not a game. I can see that point. The problem is if you bought FANG-related stocks, you're down. If you bought Netflix, you're down 70%. You bought Palantir and Tesla, which have just gigantic amounts of research and think tanks talking about these companies, you're down 50%, Tesla's down 30% year to date. So it's like, you can't just say the meme stocks are the reason why people are down on their money, or crypto is why people are down on their money, without acknowledging that the entire market has crashed. The entire market since February 2021 has been on a downward spiral, because that's the nature of having, pumped $7 trillion of market stimulus into the economy, and all this Fed liquidity and all this inflation that's going on, supply chain issues. Like, it was inevitable that this was going to happen. So rather than the SEC kind of talking about some of the macroeconomic issues that is causing this stuff, they want to put the blame on the individual investor. Now, I think that's like, it's kind of despicable, because it's like, okay, you're going to put the blame on the individual investor, even though the individual investor is getting screwed everywhere. So it's like, then that means everyone's just a bad investor this year? No, it's just a bad year, so things happen. And I understand that. And I think that's kind of sucky that the SEC kind of goes that way. And I think this is a weird gloating public service campaign that they're doing to try to get people to like realize what it means to invest in meme stocks, especially when there is a massive movement against the hedge funds that do. I mean, the whole point of the GameStop AMC movement was to criticize how the hedge funds have manipulated companies. They short companies down to dirt. It's a quite un-American thing if you think about it. Like, these companies that are trying to be successful and for no fault of their own, you're shorting the crap out of them, trying to drive them into the ground for your own profitable gain. It's the cutthroat nature of capitalism, but the SEC seems to have no problem when, things like that happen. So that's the first thing. The second thing is, I do understand sort of what the SEC is trying to get at here as well. So I'm going to try to play devil's advocate here. If you've got a lot of people that are investing, and a lot of people are just YOLOing on a bunch of random stocks, and they're, putting a bunch of money into stocks that probably aren't the best places to put their money based upon the lack of due diligence that they've done, and I've been a victim of that as well. I'm not going to act like I'm the best stock picker in the world. I've definitely, before I was, concentrated in my portfolio, I was betting on a ton of random stocks in 2020 because everything was going up, right? And I was the first time entry into the market. I think the SEC is trying to fight back against that, because I think they know, look, that's not the best thing in the world for people to do. If people enter into the market and then they do all these types of things, it causes some issues, right? If you just get into the market and you start doing all these types of things and you just like do whatever you want to do, and you think that this thing is going to go to the moon and the Luna disaster we've seen, I do think it is necessary for the SEC to have some type of public service campaign, some type of educational, informational campaign to tell people that this is not the right way to invest, that there are different things to look for when you're trying to create an investment strategy, an investment portfolio, or else you're going to get burned. The patronizing way that they chose to do this through this game show where people are using these common terms like meme stocks and obviously referencing Wall Street bets, and then just like putting all the blame on the individual without any blame on the institution, without any blame on the lack of regulation that the SEC has had, and without any blame on some of the major brokerages that have done, faulty forms of marketing like Robinhood. Like, to shift the blame on the individual who's just trying to get a better financial future, it's not the best look. Although I do understand that investing is a very individualistic game, and at the end of the day, you're in charge of your money, and so you have to have full control and full autonomy over things you do. I think it is a two-sided issue. I think the SEC could have done this in a lot better way. They didn't have to just like gloat to people in the way that they're sort of gloating. But I do think it is important for people to recognize, how to properly invest. And I don't know how to properly invest. Everyone doesn't know. Like the properly invest requires years and years of experience in dealing with stuff. Now I'm not buying certain stocks at a certain price if I think it's a good deal, because I feel like there's different fundamentals that I'm looking for. I'm looking at price to sales. I'm looking at EV to EBITDA value. Like I'm looking at these things now because I understand, and I got burned on those things when I wasn't looking at those things before. Am I a perfect investor? No one's the perfect investor. And I think the SEC could do a better job of actually putting out informational content around how to think of stocks and how to invest in stocks versus just telling people that they're full of crap because they chose to bet on AMC or GameStop when, it wasn't even necessarily them to blame fully. It was, I think, a lot more structural and collective factors to blame over just the individual. So this is the SEC's new marketing campaign. I think there are two sides to it. I can see the bear side. I can see the bull side. I ultimately wish they just did it in a better way and didn't do this type of gloating routine. But I do think there is an argument for investors to be a lot more cautious over how they invest, especially in a world in which scams are running rampant. Let me know what you guys thought about this video. Looking forward to your comments. I'll see you in the next one.